Hello traders, it's Samurai Trader here. Welcome to my video on pivot point trading. Not a day goes past when I don't receive an email or a phone call or asked a question by my students and clients about trading pivot points. And quite often, if you listen and watch my videos on a regular basis, you'll see I talk about pivot point bounces, etc. on a regular basis. So this video is to really go in depth to a degree on how to trade pivot points and a few things that you really need to know about pivot point trading. Now, as always, one of the risks is, of course, information overload. Now, pivot point trading or learning about pivots isn't critical, but it certainly helps in your trading. And as I say on a regular basis, after a period of time, you have what I call aha moments. Aha, that's how it works. Now I see how that works. So I suppose what I'm trying to say here is be patient with yourself. So I'm also going to go to the charts. So I'll show you, we'll look at the ES, we'll look at perhaps a Forex market, and we'll have a look, of course, one of my favorite markets, the NQ, and we'll just see how pivots relate and how you can trade those with those markets. Now, if you haven't already done so, please go to full screen, as very soon we will be looking at some charts. Of course, I need to mention the risks. There's always a risk in trading. Please feel free to halt the video and to read the disclaimer in detail. End of the advertisement. Let's get in and talk about pivots. So you may have heard this saying before: there are bold traders and there are old traders, but there's no old bold traders. The reason I bring that up is that I'm in my 50s now. I'm becoming, well, I classify myself as fairly conservative, but I'm a day trader, which means I'm willing to take a calculated risk. And risk is all about really knowing the probabilities. So I know my probabilities. So some of the experienced traders watching this video may say, well, look, I'm willing to jump in earlier. I'm willing to have a sell limit order or a buy limit order right at the pivot. And there are lots of traders that do that. I'm going to be showing you a more conservative method in trading pivots that works for me. And really, you know, as I say regularly, is get rich slowly. This is not about getting rich overnight, but trading pivots can be a great way of adding profitable trades or improving your trades. Now, thanks to technology today, when it comes to pivot trading, virtually every trading package now it comes with a program that will automatically calculate floor pivots and plot them on your screen, where the old way you used to have to do it manually. And we're going to get into the formulas in a moment. But virtually every trading package now has pivots in it, floor trader pivots. Now we're going to talk briefly in a moment also about Fibonacci pivots. Fibonacci pivots are totally different than standard Fibonacci retracements, etc., but we'll come to that in a moment. So what is very, very important though when it comes to trading pivots is, because of the way the calculations work on the open, high, low and close, is you've got to consider the time zone that you live in around the world. So so you really need to check that out. Now I'll be showing you two ways that I do it on my charting package, and I use a program called TradeStation. And I've actually purchased a set of pivots from Roy Kelly, so I use a slightly different set of pivots. What they do, they just give me, and I'll show you in a moment anyway, we'll have a look at it on the screen. So floor pivots, if your charting package doesn't already have them, if you go onto one of your trading forums, that is, or Google it, virtually you can purchase floor pivots for every charting package there is now. And for a lot of them you get them free. That is, you go onto the forum, somebody's already coded it and they'll pass it on to you. It's just really, it's a wonderful thing about the internet today. So just recapping what I just said there, different time zones we're going to have a close look at, because that can really affect the calculations and how they actually work. Now we can see on this slide I've got on the screen, you can see the dotted lines, and what we've got here is various types of pivot points where price supports and resistance, and that's really what they do. And so we can see here on another one, this is on the ES, this is on the 5 range, is you can see the pivot points, and you can see here, and we'll look at this on a live screen in a moment, how we bounce from one pivot to another. So what exactly are floor pivots? Well, floor pivots were put together many years ago by the traditional floor traders, and floor pivots are the most popular pivots used in Forex and futures trading, originally used, as I mentioned, by floor traders. They're calculated in advance, so you can really call them, and this is so true about pivot trading, is it's a very much a leading indicator, because unlike a lagging indicator where it's a moving average which is plotting on the past, on history, the floor pivots is plotting in advance. So it's very much telling you in advance where prices are likely to bounce, and we'll see that in a moment. And so as I mentioned, it's really an invaluable tool to have in your arsenal of trading. Now you can see the calculations there on the right, and what we're looking at, you can see the black here, the PP, that's the primary pivot. When we trade above the primary pivot, usually that's telling us what we're probably going to be, we've got a bias to the long side. Now what you can have is trading in an oscillating market. That is where you're in a consolidating market or you're in a trading range, and you'll quite often see, as you will see in a moment on the screen, you'll see that we bounce in between pivots. Now a lot of traders wonder why quite often the market stops at a certain point. Well, quite often, of course, it could be support and resistance from a previous high or low, and many times, if they don't have floor pivots on their screen, they're bouncing around a floor pivot area. However, floor pivots are still just a tool. We've got to remember that. Now support and resistance, and we see on the bottom, a bottom comment here, support and resistance levels 1 to 3 act as targets or reversal points, and some traders calculate as many as 10 support resistance areas, meaning that there's 20 different lines they may have on their chart. Now in a very fast moving, very active market, they'll trade those. Now we're just going to concentrate on the main pivots today. The other thing we're going to consider here is which is very important, is the weekly and the monthly pivots. Now weekly and monthly pivots can have a major impact on the market as well. I'll show you some examples of that also live on the charts. So let me just move down. So you've got your standard floor pivots, and then you've got Fibonacci pivots. So it's a total different program than your floor pivots. And as I also mentioned, Fibonacci pivots are very different than your Fibonacci retracements or extensions. Now you need to buy a specifically coded program or indicator for doing Fibonacci pivots. Now personally, I don't use them for my day-to-day trading. However, I have some traders, some students that use Fibonacci pivots very successfully. So it might be something that you want to explore. Now let me just go back, and I'm sorry if I sound like a broken record at times, but remember, master your T1, T2 and T10 trades before you move on to any of these. Okay, so very important. I don't want to be throwing you too much information or getting you to jump from one thing to another. Now the calculation on the right hand side, you can see here, you can see you've got the standard floor pivot calculations, but then they're adding fib calculations into it. So I'm no mathematician. I'm not going to run you through the mathematical equations for that, but you can see on the right hand side, and if you want to Google it and find out more, you can. But Fibonacci pivots for Forex traders has been very successful. So if we look at these daily floor pivots, which were calculated by the pit traders, of course in most markets now, most trading is now carried out by computers, and you've got a trader there. However, floor pivots are still very respected. And if we look at this one here, this is trading the E-mini, and this is on the 5-minute. Now remember, floor pivots, because they're working on calculations of open, high, low, and close, etc., they work on all time frames, all markets, whether you're trading minute charts, range, tick, Renko, the calculation still is the same. And what we can see here, we can see off a primary pivot, we've gone up, we bounce off that, we come down, we bounce off the S1, we've come back down, and you'll hear me talk regularly about profit targets. For an example, a normal logical profit target, or at least to have a trailing stop behind it here, is a bounce off your S1 heading back up to your primary pivot. Now what you do find though is, of course, you get a lot of false bounces in a strong trending market. So if you've got a market that's really shorting, it's falling to the downside, you quite often you'll get a bounce off a pivot, but then it'll continue through, it'll come back up, and I'll show you some examples of that, then continue. Likewise when you're above the pivot. So here, up to at least this time, we had a short bias in the market, and when you're above the primary pivot, quite often then it will give you a long bias in the market. Now we can see some examples here before we go to the live trade. So this is just another PowerPoint slide here. We can see how we're bouncing off these pivots. So we can see our bias here on this particular day is to the downside. So you can see we've come down, we've bounced off there, bounced again, gone up, and then we've broken through. We've come up, we've retested that, it's support down here, it's broken through, then it becomes resistance. Now this is where my conservative nature comes into it, and I use additional indicators to confirm a pivot bounce. And this is where you'll have a lot of bold traders. They'll put, for an example, a buy limit order. Now a buy limit is an order in advance. So we come down, we hit that limit, and they're in the market. Now personally, yes, pivots are great to trade, but quite often you'll go through them and you can get stopped into a trade which just doesn't work out. So I prefer to use some other indicators, which we'll cover shortly, to confirm the trade. So we can see here we've broken through, we've gone up, tested it, and away we go. So you can see we've got a really short bias in the market here. Now here we've got an oscillating market. That is where we're in a trading range. So we can see our primary pivot here. We've gone up, we've tested it, fallen, gone up, tested it again. We formed a little double top here, then we've broken, come down, and we've bounced off the S1. Now from your primary pivots, your S1 and your S2 are your most accurate ones if you're going to go down and test those or go through those. Likewise your R1 and R2. And this is where it comes back that you're going to need to do some homework. That is, before you start trading pivots, you really want to be watching them for a good 2 or 3 weeks and getting a general idea of how to trade them. So I'm giving you a good overview, but one thing I can't give you in this particular session, of course, is what I call the screen time that you need to gain to trade these correctly. So let me give you some strategies here. So pivot points, use them as support and resistance. So of course you've got your swing highs and swing lows, they're going to form points of support and resistance. Then of course you've got, as I'm talking about here, is your pivot points. Now in some cases a trader uses the pivot points as an entry point when the price is able to break through the pivot. Now a lot of traders, when they see price break through, they'll automatically jump in and say, if we're to the long side, they'll buy. But what you'll see time and time again, as we're about to have a look at, you'll see the market will basically, it's almost like a bull or a bear trap. It gets them caught in, then it reverses. So there's a couple little techniques I want to show you here. So the candle close above or below a pivot point is used for trade confirmation. That is how most traders use it. I like to, as you're about to see, use additional indicators to confirm the trade. Yes, it means I'm going to get in later. And if you look at, for an example, John Carter, he talks about this in his great book. He's got a great book called Mastering the Trade, by the way. It's just a brilliant book. He likes to have a buy stop or a buy limit order, sorry, or a sell limit order in the market when he's getting into these trades. And what he points out in his book is that for a lot of traders, the move's halfway over because they're waiting for additional indicators to confirm. Well, I still prefer the additional indicators. And that book, by the way, was written 10 years ago now. I think the markets have also changed a little. Another thing with pivots, it's a self-fulfilling prophecy. That is because so many traders around the world use pivots in their trading. You're going to get the bounce just from the market psychology. We've got there, let's see, in other cases that's meant to the trader uses, that should be, I'm missing an R there, traders, sorry about that. The trader uses the pivot point as a rejection for entry into a counter trend trade. You'll see that in both cases needs to use momentum indicators for confirmation, which we'll have a look at. Now the weekly and the monthly pivots, we'll have a look at that, and we bounce off those, and if anything at times they can even be stronger for being resistance or support. So let's move on to the next slide here, and a couple of points before I go to the charts, and it's this: the essence of day trading the pivot lies in going long when the market violates the pivot in a bull rally, and going short when the market violates a pivot in a bear break or a downward move. So your primary pivot, if you are under that, there's a good chance, and it's giving you that the market's going to keep dropping for a period of time, so it's giving you a bias to the downside. However, in most cases we're going to wait for a pullback, a retracement before we enter, and I will show you that. Now I also like to use, as I've already mentioned, the rule of multiple techniques. Now this is covered extensively in a great book written back in '82, Techniques of a Professional Commodity Chart Analyst, page 3. Is that what he quotes is this: really, just as in real estate, location, 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 in trading I like to verify, verify, verify. Now what that book talks about, or what's written in that book, is that if you have an indicator that's a good indicator that say gives you a market advantage of 10%, if you have multiple indicators that are each giving you that are totally different, that is, you don't want to have them all as momentum indicators, they're basically modeling each other, but if you've got a number of indicators that are confirming that trade, it improves the probabilities of that trade. And I like to improve my probabilities by using my key setups, such as full candles or reversal candles. So when I'm trading pivots, I want to make sure that I've got what I call a full candle or reversal candles, that is, that are pointing in my trade direction. Of course we use the T1 plot for that, and for traders that have got the trade station indicators, or for others, you know exactly how the T1 plots and why it plots. That will give you an advantage. I love divergence using either the T19 or the T89 when I hit a pivot. If you've hit a pivot and you've got divergence, that's a trade you're going to take every day of the week. Another thing that you'll see is angulation. Now angulation goes hand in hand with divergence, and in my course, of course, you learn all about this, but angulation dramatically improves the chances of that trade. You have the zero lag confirm. If you don't have a zero lag, of course you're using the Hull moving average, so that rolling over. So you can see here I'm looking for a number of things to help confirm the pivot bounce. So what I'm looking for is a breakthrough, a pullback, and then that for the trend to continue. So what I'm now going to do is go across to some charts, and let's have a look at some live on the screen. Okay, so what we're looking at here, traders, is the NQ, one of my favorite markets, the 133 tick bar. Now irrespective of the market you trade, it works, as I mentioned earlier, on all time frames, whether you're trading time, volume bars, tick, Renko, range. It works on all, because the calculation on pivots has nothing to do with price or the current price action. And you can see here that, let me just go here, that if we go right to the the end of today. Now today's, by the way, it's Thursday the 16th down under here in Australia. We see the market closes here and has reopened at 8 a.m. and you can see here the pivot, which is this dotted line here, is already plotted. We've already had a minor pivot bounce. But let me go back to my trading from today and we can see here, and let me walk you through some of these pivot bounces. Now remember earlier I mentioned to you about time zones. So what I'm using in this particular one, I want to show you some trades and I'm going to swap it over. I'm using the exchange open, high, low and close. Now this particular pivot is a mid pivot. It means it's in between two major pivots. Is that this is automatically calculated and plotted on my screen using an add-on that I've purchased. Now TradeStation has its own floor pivots in it. It just doesn't plot the midpoints, but we can see here we've come down, we've had an 89 bounce here, we've gone up, and this is where I refer quite often. We're about to hit a pivot. Now normally speaking, I work on my local time zone pivots, which I'll show you in a moment. So we've gone up, we've had a bounce, we've hit the pivot, we've then had a shorting opportunity. Now notice here on our platinums falling away. So this basically, I've got, even though it's not great divergence, but I've got some divergence here pointing out that we're very good chance that we're going to fall away to the short side, which is exactly what's happened. So we fell away. We had basically then really a T89. We've gone up here, we've punched through the key pivot. You can see just there. Okay, so this is 8:35 exchange time, and you can see here we've punched through the pivot and we've fallen away. I'm not going to go through these other trades we had here, which is some great trades last night, by the way. You can see here again we've punched through the pivot, we've gone straight up, we've had some beautiful divergence, but we're through the pivot, we've come down, and look what happens. You can see here the dotted line is my pivot. We've come down and we've bounced off that pivot again. This is also an 89 EMA bounce, and for my students, you know, it's one of our favorite trade setups. We also closed above the 34 and my zero lag is turned. So these are great trades to take. It's also what I call wave one. It's the first major trade, a major pullback we've had in this trend. So let's just move along a little here, and we can see we go up. Where's my next pivot? Now let me just show you this here. I'm just going to pull this down. So my next pivot was not up till here. Now what you'll see happen time and time again, price will trade from one pivot to another and then bounce and then maybe go through it. So for long-term profit targets, you can have it from pivot to pivot. Now what you want to do is, because this one as an example turned around and fell away, you may have a trailing stop. That is to trail your stop behind you if it doesn't go from one pivot, so you don't give all your profits back. But one could argue once you got up above here, you had your stop here, it's then become, and you lift your stop up, becomes what we call a free trade. You've got no risk, and when it does travel from one pivot to another, it becomes very profitable. Anyway, I cover that in another video. So we can see here we've rolled over. We had a lovely T10 up here, traders. Actually we had a stop T10, and then we had we got all our money back and a whole lot more in this one. But then we come down and we had a pivot bounce. Now see, we've come down, we've got divergence, which is fantastic. I've got T1, I've got my zero lag. Okay, we would have already been in on this pivot bounce. Now what a lot of traders will do, they will put in a buy limit order. So they come down and they're automatically what we call stopped into the trade. They're into the trade when they come down here. I'm not in till up here. So yes, I know I'm giving away a few points here, a few ticks by waiting, but I prefer to do that. It's just my form of trading. And then down here we had a beautiful T10 trade as well. But the point here is you can come down and you can see how we've respected that pivot to the short side, and then we've bounced up. We go back up again. Let me see where the upper pivot, and you can see we didn't go right up and touch it, and then we rolled over. And what happened then? Then we come down and look at this here. We had 3 pivot bounces in a row. Bang, up to the 200 and up to our 89. We had a nice bounce trade here. Then we bounced again off a pivot again. Now traders, and this is for particularly those that don't have my training course, is that what we call regularly front run. That is, you'll find, as we've seen here, a strong resistance at these levels. So if we're in a trade, we'll take some profit off at these levels, because you go up and you bounce off these, and you can see it. This is exactly what's happened a couple of times here. So you've gone in, you've had a really nice trade here, a bounce off the 89. This is one of our highly accurate trades. We've come down, we've bounced off a pivot again, we've gone up, bounce, come down, follow through, and bang, away we go. Then finally we had a bounce again. Now further along, you can see here, we then come down, we test it here, and for my students that are watching this, you can see here we then had a T2, but the comment I wrote up here as we were trading was it was right on the pivot. You want to be very cautious when you're trading up against a pivot, and there's something I want to show you here on that, which I think I wrote in further along. Where you get these strong pivots, like you've got and there's an extra black line there, I'll explain in a moment. So you can see here we've got our 34, we've got our 89. Yes, the 200 still in a downtrend, but notice how notice how it's all basically horizontal and traveling along a pivot. This is where you've got to be very, very cautious with your trading, is that this is where you can get chopped up really badly. Now we had a fantastic day today, or last night, with our trading. So with this, when you're up like that, you may give away one trade and say, okay, I got stopped out of that. What's the market going to be doing? I don't know. Let's just sit and wait for a new breakout. So once again, where you've got everything going sideways, this is what I call chop city. You have to be very, very careful with your trading. Now you can see here you hovered around this pivot before you went away again. Now what I want to show you is this, because this really comes down to the time zone that you have. For an example, Ninja Trader, you can adjust the time zones, and this is where you need to go on and to really test and play with the different time zones. So let's have a look at this here. So see down here on my particular program, TradeStation, I've got here exchange, or I can get local. With Ninja Trader, you can adjust the time. Actually, if I remember correctly, central time, you can put different time zones in. So I've just put a black line here just to show you. Let me just close this for a moment. Oops, I've already clicked on that. Sorry traders, let me just go along here a little. Now I just wanted to show here that this is the exchange pivot. Now see, I've put an extra black line here. Let me go back and change this. Sorry if I'm mucking you around here a little bit. Now let's go to my local time, okay, in my country, and you'll see it projected down here at the bottom, because what this does, it changes the pivots. Let's now go here and have a look at this. Now this danger zone, notice how that black line, that was this pivot. So if I see that time, see that there, so with the time zone, it changes where your pivots plot. Now I don't fully understand why this is, and I can't give you the answer for this, but I usually use my local time zone pivots because I find them successful. As an example here, if I remove that there, we can see here that using our local time zones, I still get lots of bounces, lots of support, lots of resistance on my local time zone pivots as well. So they're out a little bit compared to what I had. So long story here, I want you to go and test your pivots on different time zones, plot them, and just make sure that they plot okay, etc., and that you've got them right. Now let's go across and have a look at the euro dollar. Now this is the chart we're looking at here right now. This is current as of the 16th of the 7/16th. So we're in July 2015. Now the yellow line I've got here is a weekly pivot. So you can see here we've punched through a pivot here, we've gone up, and this is what I want to show you here. Remember earlier I like to look for a pullback, so we can see here, and hopefully there's not too much on the screen. Actually what I'm going to do, I'm just going to disable my channel. So see here we punch through a pivot, we go through, I wait for the pullback, then I enter the short, and you can see we bounce off that pivot beautifully. Now we can see here by my 200, the 89 and the 34, we've got a definite downtrend here. So quite often you can put an order in here to either buy or even to sell, get you in a bit earlier, but I like to wait because quite often you'll see a punch through and you get these pullbacks. Now down here you can see you've come down, you've hit resistance or support I should say on your weekly pivot, then we go up, but then the trend continues. So still follow the trend, and so still I should say respect the trend. So you'll quite often see this where you'll get a lot of pivot bounces. Now another thing to be careful of too is that in this particular case I've got history showing. That is, you'll see here that I've got, this is today's pivots, I've got yesterday's pivots on there. So on my particular program I can actually have pivots going back for months, back as much history as I load. It's an option I have. It also can really draw on your CPU. Remember, the more indicators you've got open, and this varies from charting package to charting package, the more indicators you have open, it can really, in a fast moving market, it can actually choke your system. So just have open what you really need to have open. Now for illustration purposes I've got the pivots open here. Now see this here, so I wanted to illustrate. Look how we've gone down, we've been bouncing around these pivots, and if you're wondering what on earth is happening here, why isn't the market moving or why is it consolidating, you can see here it's on a weekly pivot, and this is also called a chop zone because you can be badly injured on these. That is, your trading losses can really mount up. Now from a technical point of view, we had a lovely little double bottom, we got fantastic divergence here, and we've got a T10. Now this is a 5 range, which means if you're trading a standard contract here, each one of these candles is worth $50. So there's still some great trades there, but you can see it's giving some really strong support there. We've gone up, we hit the pivot, we bounce around, come down, and there's some other things happening here. We've also got the 200. Now let's go along here and we can see we've bounced around this pivot. Not a great example, but you can see we're hanging around the pivot areas. What I'm now going to do, I'm going to pull up the ES. Let's have a look at the ES, and this is actually, this is the 144 ES for today's action. So let's have a look at this. Now for our European friends, this is of course very early in the morning for you, but for my North American friends, if you're on the of course from New York to LA, etc., you've got home from work, you want to do some trading after work, well there's some great opportunities trading the aftermarket. So what I've got here is the ES 144 tick. Now during the day, during your main market hours, this is far too fast to trade. For me it is anyway, for most traders. But after the market closes, you get home from work, 2 or 3 in the afternoon in LA or New York, later in the day, the 144 gives you some great trading opportunities. Now you can see here that I've gone up and we've hit a pivot. Can you see that there? You can see the pivot there. You can see this bounce. We've come down and we've hit another pivot. So you can see, as a tool for support resistance, it's absolutely invaluable. Now sorry, I'm just going to go back here. I just want to check what's my time zone here. Now I'm working on the local time zone. Okay, let's have a look. Whoops, I just clicked on this again. What I just want to do is show you something, and and the reason I keep coming back to this is really important that you test this. So what I'm now going to do is to go and change this back to exchange time zone. Okay, and in this particular case we can see up here, if I remove that exchange, it doesn't give me an upper pivot. Now it agrees with my lower pivot I've got here. And sorry traders, I'm just going to fix this up so we've got this out of the way. Let's have a look. Okay, so you can see the difference in these pivot levels, and this is how important that you get your timing right on your charting package with your floor pivots. Okay, you can see the effect. Now so locally, getting back to my local time, I'm much better having, and you can see, and I find it's very accurate trading my local time. My pivots work really well with this particular program. So let's now have a look at maybe another market. Just one moment. Okay, so what I've pulled up here is just the NQ for NASDAQ 89 tick, and you can see here as the market closed, we come down, we hit the pivot. This is just to confirm here, I've got on here my local time zone, and you can see the pivot was actually up higher, up above here, but we've come down, we get down a little bit when the market reopened, we've bounced, we've gone up. So traders, I've covered a lot of information in this, and I hope I haven't confused you too much, because trading pivots, there is a little bit of a science to it. Remember, if you're above the primary pivot, the PP or the main floor pivot, quite often you've got a long bias. If you're under it, you've got a short bias. In choppy markets, consolidation markets, or range bound, you'll bounce in between. You'll see yourself quite often bouncing from one pivot to another. I like to, as I mentioned in just closing this video, I like to use other indicators to help confirm the trade. I still believe very much in following the overall trend. As an example here, we can see my 89, my 200 are all what? All pointing to the long side. So I want to really obey that, but where I get angulation, that is prices moved right away from my MAs, and of course if you're a student of mine, you know what angulation is, etc., and you're hitting a pivot that really enhances or